morning, folks, and welcome to another great edition of Money Truth Moments with our very own financial expert, great guru in finance, and also our money whisperer, Judy Copenbarger. How are you this morning, Judy?
I am awesome. Beautiful sunny day. I'm just having the best Tuesday ever. How are you doing, Carlos?
I'm doing fantastic. I've been looking forward to the second portion of this show because, folks, if you're just joining us for the first time, last week we got to discuss some of the new tax laws with Judy. She talked about a lot of personal things that we need to be aware of. Also, there was a lot of great news. So if you didn't catch the show last week, make sure you do so. And if you're not following Judy, please do so at judycopenbarger.com. We're going to talk about our website. We're going to talk about resources, but more importantly, today's topic, we continue on the 2023 taxes and regarding businesses. So, hey, I'm going to let you get started.
Well, it's all good news. You say taxes and people go, oh, It's all good news. So for 2023, I bring good tidings. There are a lot of tax law changes, as there are almost every year. And when there's a change in administration, a change in lawmakers, which we've had recently, that usually means even more transition. And we've got that. But just about everything I have to share with you about business owners celebrating tax stuff they need to know for 2023 is good news. So I'm bringing all good news. In fact, I brought a 6-pack with me.
Nice.
Six things that will help small ministry and small business owners really do better than they could before. So all good news, and I'm ready to share that. Are you ready to go?
Let's do it.
All right. Number one, now this applies pretty much to every taxpayer, but I want business owners to know this. The standard deduction has increased, and that's a gimme. That's something that Uncle Sam gave us. It's good news. So what that means is every year when you go to pay your taxes, there's an amount of money that you don't have to pay. There are some dollars you don't have to pay tax on. And so last year, that amount for the standard deduction was $12,950. Now, that's if you're married filing jointly. There are different numbers for different filing statuses. So, and I'll talk about that in a moment. But it increased. It increased this year for inflation purposes to $13,850. So we have another almost grand we don't have to pay tax on that we would have had to pay tax on last year. That's awesome news. Now,
I'll take it.
Yeah,
Sure.
I know. It's like ka-ching. So that's awesome news. Now, what you need to know about that is that's not the number for every single person filing a tax return. So the way to find out exactly what your number is to go to irs.gov, that's irs.gov, and look up the tables for what those numbers should be based on your filing status. If you're single, for example, or filing head of household, there are different ways to file. Or if you're married but filing separately, you're going to have different numbers for some of these different boxes on your tax return. But if you're married filing jointly, that's great news. Singles also have a benefit. It's just not quite as big, right? It's like half because you're half of a couple. But that's your standard deduction. And that's number one of 6 really great things that have happened in the tax law changes for this year. You ready for number 2?
Let's do this.
All right. Now, this one is kind of a double-edged sword. It's about the 1099s. So for record keeping, it's great. For tax paying, may or may not be so great. So here's the thing. When you have a small business and you are compensated, you've got to pay tax on the earnings that you have, right? But it goes the other way as well. If you hire somebody to help you, and in your small business, you might hire a bookkeeper part-time. You might hire someone to help you as a personal assistant, maybe run errands for you, set your calendar, maybe do something in your manufacturing workshop, right? If you have a shop outset and you're working with products and things like that. So you hire these people, but they might not be a full-time employee on your payroll, but they're doing something for you. And a good example is someone that helps you in your home. You hire a handyman, you hire a contractor to, do some wiring in your home, or a caregiver that comes into your home, either looks after your little ones or your folks, right, in their later years. And so those costs, those expenses, you're actually paying somebody, but there's no payroll, which means no payroll tax. And you know who gets left out? IRS is like, wait a minute, We didn't get our hands on that money. And so the way that we let the IRS know that we paid someone or we received money is with a 1099 form. It's also how we show money moving if we earn dividends, if we sell a stock, if we have interest that comes in on a bank account, a 1099, and there are many types of them. But it's a way to show money moving that should be reported for tax purposes. So the bad side of this is that you may have eked out some income that didn't show before, and now it does. If you're an honest person, you already have it on your return. But the big change in 2023 and the rules are that now, if you make money from ad revenue on, let's say, YouTube, there's all these ways, Etsy, all these ways, Venmo, all the social media sites that pay you. Anytime you make more than $600 in a year, you have to have a 1099 issued to you. And so you heard a lot about, the Bitcoin and all the cyber money that moves around and things like that. That wasn't reported. And the reason it wasn't reported until recently is it was too new. Like IRS is like, I don't know. We're still walking around with stone tablets. We don't know how to track that or anything. Yeah. Well, they figured it out. And now all that reporting is happening. So if you've kind of eked under the radar and you were earning more money than $600 a year, now you're not under the radar. Now you have a record. But the other side of that is for people that are independent contractors by nature. I have a guy that comes and cleans the windows at the house. I have a guy that comes and washes our cars occasionally. People that you pick up on Nextdoor or neighbors that are just, doing little jobs. And so I don't pay them a lot of money, but over the year, it's over $600. So you can get in a lot of trouble if you don't file a 1099. And there are exceptions, if it's a corporation that's not medical or legal related, there are exceptions to that. So you want to really go to irs.gov, make sure you know the rules. But the good news for people that do jobs like that, and they have a lot of clientele, they have a lot of customers, is now the record keeping is done for you. You just get one 1099 that says, here's all the money, right? You don't have to go through your whole year's bank accounts trying to figure out, did I make over 600 from that client or under? They just hand it to you. That's the good news. And that's number 2 of our 6-pack today.
So Judy, I have a follow-up question that somebody just wanted to know. So the minimum for the 1099 has to be, in order to report it, has to be above 600. If it's below 600, there's no reason to report. Okay.
Don't need it. Yeah. Yeah. Great question.
Yeah. And folks, if you're just
joining of those, and IRS would never know it. You can have 100, you could charge 100 people $500 each and not have to report it on a 1099.
Got it. And that's good to know, folks. And also for you guys just joining us, please make sure that you watch the beginning of the show. We are talking about taxes 2023 for businesses, and we've covered already two of the 6-pack that Judy's sharing with us today. And if you're not following her, please do so at judycopenbarger.com. But let's keep going. This is fascinating.
Okay, the next one is the rules have loosened just a little bit, and it's probably coming out of, this inflationary economy we have, coming out of COVID, all these recovering small businesses. So we got a little grace, besides the inflation, deduction raise. But there are a little bit more liberal rules for the write-offs that you get. Now, in a small business, if you're a business owner, the write-offs are valuable because you have what you earned, and then you have what it cost you to do your business. You have your office expense, maybe your vehicle is part of your business. You have people that you hire, the equipment you need, the manufacturing products you need, tools, whatever it is. Those expenses come off what you make, and then you pay the tax on what's left, right? And that's what passes through to your tax return. So in a small business, there's a couple ways you can do that. If it's a emerging business and you're not making maybe 6 figures yet, that's probably a good rule of thumb. You can just file on your ordinary individual tax return, whether it's married or however you file. And there's a Form C that allows you to write off all of the costs of doing business. Your office expenses, when you go to the stationery store and buy paper clips, the printer fees and the paper you put in the printer, and the hammer that you bought or the rakes that you bought to go do your work, pull equipment, whatever it is. So that's valuable. If you are incorporated, then you have an 1120 form rather than a C form. And this is a form where it's a lot more liberal. The categories are much more broad. And when you have a corporation, you're actually less likely to be audited statistically. So what happened years ago is, they say pigs get fat and hogs get slaughtered. If you get greedy, it's going to come back to bite you. And so people would have these home-based businesses, and this goes back to the 70s and 80s and then all the way through. And they say, well, my bedroom is an office and my dining room is an office and my living room is an office. And I'm going to write off all the expenses in my house because that's my biggest cost. And IRS said, no, really, it needs to be exclusive use. The square footage of your house divided into the total footage. That's what you can write off, really. And part of the electric bill, maybe a phone bill. So when you get greedy, that's when they're going to be on the radar. You're going to be on the radar for an audit. And most people don't want to go through that. I've been through them. And for me, it's the time consumption of preparing and answering all the questions 85 times. But some people are nervous because maybe there's numbers they don't want to be showing, right? So just always be honest, have integrity when you do your taxes, pay what's due, but don't pay any more. Which brings me back to number 3. Any expenses that you have that are legitimate for your small business. If you're driving your car to the stationery store, write off the mileage or a portion of your car bills, right? If you are hiring somebody and they're washing the windows at your office or they're washing the windows at your greenhouse, if you're a farmer, make sure that you deduct that from the total. And this comes down to good record keeping. It comes down to just being a little bit diligent, working on your business and not just in your business sometimes. And if it's something that's not natural to you or you don't like to do it or you're just not going to do it or get your spouse to do it, then hire somebody. And it doesn't have to be a full-time accountant, $60,000 a year thing. It could be just someone that helps out that really has those giftings to get those details right and have you be prepared not only to avoid an audit, but to take all the expenses that you have due. Does that make sense?
It does. And I also have a question too that just came up as well. So what are maybe some things that you can share with business owners that you've seen over the years that sometimes people business owners forget that they can write this off, or things that they're not really thinking about? Because let's face it, a lot of folks, sometimes they file stuff in a hurry and it's whatever that person, whoever's doing their taxes, goes through it. It's like check, 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 and then you move on. But, in talking to you over the months, over the last couple of years, we've learned that there's more to this than that. And maybe you can give some of the things that you've seen that folks or business owners have overlooked that they could actually be, taking a little bit of advantage of with that.
Yeah. And really, it's not cheating. It's not really taking advantage. It's just leveraging the opportunities that are in the code. So, for example, if I'm going to go to Pasadena next week and I've got a meeting over there, why not have lunch with a friend, or have lunch with a client? Part of that lunch can be deductible if we're talking about the business. And so if I bring a client and a friend, and maybe the friend could become a client, part of that lunch, not all of it, but part of it could be deductible. And because I had a client meeting, all of my mileage going to Pasadena, that's about an hour drive for me from here. All my mileage going there, all of my mileage coming back is going to be deductible. Now, I might not think about that if I was just going to see a client or just go have lunch with a friend. But if I can incorporate my lifestyle and wrap it around my business, more things in my normal life, my normal expenses will become deductible. So that's an example. Another one I've alluded to a little bit. If you do have a spare bedroom that can become a real office, and that doesn't mean it's your guest room that you put a desk in the corner. It has to be exclusive use for your business. And let's say that bedroom represents 10% of the square footage of your whole home. Now, your mortgage payment, your insurance payment, the taxes that you pay, the guy that comes and mows and blows, the pool guy, all of the expenses associated with the house, you take a percentage based on that footage. That's a lot of money for a lot of people. If you have a mortgage, especially if you're in California, that's a lot of money that otherwise every one of those dollars would have been taxed, and now it's not. So I think that's often overlooked. But again, you don't want to be greedy and say half of my house is office and nobody ever comes here unless they're working with me, right? Might be true, but if it's not true, don't take too much, right? Don't take too much line you're going to hang yourself with,
Right.
because the IRS knows, they know. So just be honest about it, keep records. Um, if you buy a desk for your office at home or your office wherever you are, write that off, right? And it can either be depreciated over time. If you're upgrading computers, if you're upgrading software, one thing people forget about is all the subscriptions we have, right?
Right.
Subscriptions to softwares and hardwares and TV thing. I don't, whatever people do. I'm not on technology a whole lot, but people that do will say, wow, I have 12 prescriptions, or maybe 12 prescriptions. Do you need more help?
Right.
But subscriptions. And I'm paying all this money to all these things. Well, how much of that is for your business or business purpose or education? That's another thing. If you take a class, like if I were charging for this class, you're learning about business taxes for your business purpose, write it off. Lucky for you, it's free. So there's no deduction for you. But if you do go online and learn things that help you with your business, or learn how to do some accounting, or learn how to build a new fancy birdhouse, and you're going to sell those, write that stuff off. So those are some things that people may overlook, but just think about wrapping your lifestyle around your business and what more can I take advantage of for the tax deductions.
Those are some great points, folks. And again, if you're just joining us for the first time, welcome. If you are not joining us on a regular basis, we are here every Tuesday morning at 8 a.m. And I want to take a moment now, because we are talking about resources. Let's talk about your website. Let's talk about judycopenbarger.com and what folks can find on your website.
Of course. It has a very original name. I know it's the only one. JudyCopenbarger.com. There's all kinds of great stuff there. There's articles that'll help you in any area of personal finance and small business and ministry finance. So go there. All that stuff is free. There are articles, there are YouTube videos, and videos that we've actually logged into the JudyCopenbarger.com site. The most important thing there is a little magic green button that will take you directly to the Money, Truth, and Life online mastery program. And that is a series of courses. There are 5, because there are 5 pillars of personal finance, 5 courses, each with all different classes that teach you everything you need to know, primer level, about this stuff. And what it does for people that don't have a background in economics or a background in financial advisory, or they're not bankers, or they didn't have parents that were accountants and taught them all this stuff. It's a place to go to learn enough to know the questions to ask, right? Nobody's going to know it all. Even the experts don't. Even in their field, they don't, because the law changes, right? The world's changing all the time. But it's a place to go to get enough conceptual information and factual information. I call it money truth, right? How money really moves, what you really need to know. You'll know just enough to know the right questions to ask of your insurance agent, of your accountant, of your lawyers, of your investment advisors, of your 401k rep at work or payroll. What benefits are available, and which ones should I choose at my house? It'll give you enough information to put you on the path, have the right questions, and navigate so much better than without the information. And that's all right there. Money, Truth, and Life online mastery program that you can access through JudyCopenbarger.com.
Excellent. And, I know that time is getting closer to the end of the show, but I don't want to miss out on this great 6-pack. We've talked about 3 of the 6, and I want to make sure that we have enough time to finish off the other 2. So let's keep going.
Absolutely. Number 4, capital investments. So are there any capital investments that you need to make? Some could be a write-off right now, and some could be a write-off over time. Like over time, if you buy a computer, maybe it's 5-year depreciation. So you write off 20% of it each year. If you have a house, it's going to be way more years. If you buy a desk, it's got its depreciation schedule. So what capital investments can you make? What loans can you pay off early? Or, is on time really the best way to go? So those are things that you can do to pay more in to get the expenses down. And there are ways to use the calendar and straddle calendar years to really benefit you tax-wise. And if you have a small business and you don't have a good accountant, and I don't mean, a neighbor that's, maybe does it in their spare time, but really get a good CPA that has business savvy. Not all CPAs are designed for business and business development. Some are really good at personal tax. Some are good at all kinds of corporate taxes, other things, gift tax returns. You want to make sure you have someone that understands business and business growth. And that's probably one of the best tools in your first few years in running a small business and growing a small business. You're going to need that, right? If you're an accountant yourself, then you have an edge. But make sure it's someone that really specializes in small business and understands the ins and outs of that. And instead of just trying to get the bottom line small every year, sometimes it makes sense to pay a little more tax this year, and then the next 4 years you benefit greatly, right? So that's the planning side. And in my history of working with many CPAs over the decades, and for my clients, CPAs tend to look backwards at what happened and write down and record what happened and put everything in the right boxes. And they're good at that. Not all of them are good at looking at what could happen. That's where the planners and the planning comes in. So if you find a good accountant that has hindsight and foresight, that's like gold. So consider that if you're out vetting one or getting ready to look for a new accountant. You ready for number 5?
Yes, I am.
Okay. I know we're going to get to the challenge here in a moment. There are increases. So if you have a 401k or a 403b, if you're a nonprofit or in education or public service, as a small business owner, you want to know this. This is really good news for your employees. And a 401k is one of those tools that can really attract and retain people that work for you. If you have a good program and you're kind of helping them prepare for retirement, they like it, right? So this is good news. It's number 5 of 6 good news events that happen for 2023. So for retirement accounts like a 401k, 403b, thrift savings plan, last year, you could put in $19,500 if you were under 50. This year, it went up $2,000, the max that you could put in. It's another inflation gimme that they gave us. So now you can put $22,500 in if you're up to 50, but there's a catch-up provision. And the catch-up provision is for people that go, I educated myself. I raised my kids. I educated them. I bought all those soccer balls and paid for piano lessons. And I had no money until I was in my 40s. Now I got to catch up. And so the catch-up provision allows you, if you're age 50 or older, to add another $7,500. So you have the $22,500 plus $7,500. That's a $1,000, another increase that they gave us. So if you're over 50, you can add $3,000 more than you could last year as a max for your retirement programs. If you're under 50, it's $2,000 more. That's huge for people that have that discriminate extra income. People that have that and want to save and really be prepared in the coming years. This is a wonderful godsend from IRS. Yay!
That's awesome. That's awesome.
Yep. Last one. And this is for people who had a small business they were operating during COVID. A PPP, right? Those big letters that small business owners know all too well. The process to get it, the process to try to get it, to apply, to be denied and try to get it again. And what this was, if you're not a small business owner, is it was a government program during COVID that said, we're going to help you keep your doors open. We want you to be able to make payroll and keep your people employed and get through this tough time that ended up being way longer than any of us could have anticipated. And so that PPP loan was made available to keep the doors open. What they did with the CARES Act is they said, those loans, don't pay them back. It's forgivable. And so for a lot of small businesses and small ministries, that happened in 2022. So the question became, well, now I paid it. I had this loan I had to pay, and they're saying my loan is forgiven. Well, that's a taxable event, right? If default on a mortgage and they say you owed $300,000 and you didn't pay it, like we're just going to take $200 or let you walk, any difference that you didn't pay, that's a taxable event. IRS wants their piece, right? So that would be true also for the PPP loan forgiveness. But the CARES Act says, you know what? Don't even bother. Let's just not tax that. That's huge. So some of these PPP loans were 15,000, 50,000, 150,000. There were some in the millions. And IRS says, don't worry about that. Just keep it. Amazing. So there was a lot of controversy and a lot of conversations this last year about whether it would be taxable or not. And that's what the government decided to do. That is huge for people that were in that arena, and their business did survive. Well, even for folks that didn't, a lot of small businesses, you hear about all the restaurants, that just are gone. And now they're sitting there with this big debt for tax. It's wiped away. Way cool. And that's number 6 of our 6-pack today.
And folks, that's a lot of great information. If you are just joining us, please watch the beginning of the show. This is great information for all you business owners. This is also great information for all you folks starting out new businesses in 2023. Things for you to really think about. I think that the moral of the story and the takeaway here is also to be careful. Also, who you're talking to. Make sure you do your homework when you're talking to a financial planner, a tax person, and all of that. And if you want some additional information on that, please check some of our previous shows. Judy's talked about, the 4-H process on that too, and how you can determine folks who are the best fit for you and questions that you should be asking as well, which we're always going to come up on future shows with additional, just reminders for you folks that are out there starting out or are just beginning or, in the midst of it too. So you're always being very careful with your money, with your business, and to make sure you take advantage also of the great resources that are available, such as the videos and all the content at judycopenbarger.com. So, hey, Judy's coming to the end of the show, and you know what that means, right? It is our Money Truth Challenge, right? And this should be great. So take it away.
I do have a challenge. I never want to educate without challenging folks to do something with it and not just, chuck it away and say, that's interesting, right? I want your life to be better and your financial journey to be optimized because you learned the right thing. And, Carlos, you just mentioned a point that I think I'm going to add to the challenge. So it's kind of a double challenge. I think for folks that are not aware, that have a small business or they're considering having one, and they're not aware of the 4-H process, they need to go back and watch that video. The 4-H process. That's how you get the right team players on your bench, the right accountant, the right lawyer, the right professionals that serve you. Is the 4-H process. That will help you a lot. So add that to the challenge. But the challenge that I had in mind was we talked about 6 things that can help you with your small business, things you want to know about your taxation and the breaks that we get this year. I think a good challenge would be to sit down with them. If you were taking notes, you're great. Circle the one that's most relevant and do something about it. Maybe you need to talk to HR. Maybe you need to talk to the payroll department to see what's available to raise how much money you're putting in your 401k, right? See how much more you can put in if you're at that point in life. The standard deduction, make sure that your accountant, or if you're going on doing your own electronic taxes, make sure that you know what that is and you take advantage of that. If you have a small business and you're writing off things, you want to determine if it's time to go from a Form C to a corporation or an LLC or some other structure that keeps you under the radar for audits, but also gives you more flexibility for legitimate deductible expenses in your business. So of those 6 things, circle the one that's most relevant, do something about it, and make it a great week.
Awesome, folks. And again, keep in mind, we're here every Tuesday morning at 8 a.m., replays on Thursdays at 8 p.m. And please share the stream with your friends, family, and business owners that you guys know. And also, if you're not following Judy, please do so at judycopenbarger.com. Judy, have a fantastic week. I thank you for your wisdom. We all do. And we appreciate you always keeping us on top of things just to make sure that, one, we follow the rules and we never get in trouble with that. It's all that wisdom. So we appreciate it. Thank you so much.
That's everything we learned in kindergarten. Follow the rules and stay out of trouble.
That's right.
Awesome. Have a great week, Carlos. Appreciate you.
Take care.